Hi, good morning, everyone. Thanks for joining us. Very pleased with our performance in Q3. Q3 has a lot of seasonalities, and it is traditionally in the industry and also in Infosys, it is a quarter with some challenges. And so when we were looking ahead to Q3 a quarter ago, especially coming off an amazing performance in our Q2, we were anticipating some headwinds. We were anticipating furloughs and less number of working days and things like that. And then we had the devastating floods in Chennai. So despite that, I am extremely pleased with the really amazing performance by our team, that we achieved 1.1% constant currency growth. Revenues have crossed 2.4 billion. And we managed to grow by more than 12.5, roughly 12.5% year on year, on a year-on-year basis, and still delivered 24.9% margin and a small EPS growth. And volume growth was very strong at 3.1% in this quarter, so we are very happy about that. And based on all of this, we are increasing our guidance for this current financial year to 12.8 to 13.2% on constant currency terms, compared to our previous guidance of 10 to 12% on constant currency terms. Overall, in the quarter, we saw growth, especially the thing that makes me proud is broad-based growth coming from innovation. Some of the grassroots innovation initiatives that we have embraced have started to produce tremendous results. More than 90% of our delivery organization is now participating in zero distance, has come up with some innovation, some value in every ongoing project. So it is a very, very large scale innovation endeavor. We are very proud of that. And on the systemic innovation on the Aikido services, we have seen significant adoption. We see continued great adoption. The automation that is powered by our automation platform in has now, in the last quarter, we saw more than 1,100 people equivalent simplification, meaning removal of work, 1,100 people worth of work because of automation. So that is already starting to show results. Our information platform, our big data and machine learning based analytics platform, has now reached 200 of our clients. So that is something we are very proud of. And we saw growth in Finacle, in Edge, as well as in Panaya and Scava, in starting to reach scale. In Key, we are very proud of a lot of work that we have done with clients in managing the renewal of their legacy landscapes. We have launched a substantial effort in moving legacy systems to the cloud with new modern architectures and new modern software development techniques. That has started to reach a good scale. And in particular in design thinking, we have crossed 150 client engagements now, and that has started to show results. So overall, quite pleased with the broad-based results that we have started to see in the quarter, and that sets us up for a good quarter ahead and a financial year ahead of us. Praveen?
Nothing to add.
Yes, you have upped the guidance for the next quarter. Do you see a strong quarter four also, despite what's going on globally in terms of the markets suffering so badly globally? Do you still see a very strong quarter four?
Well, people ask about what is happening broadly in the markets, and my personal take always is we are seeing a tremendous disruption in every industry around us on the power of computing, on the power of digital technology. And when the times are good, people need innovation, and especially when the times are bad, people need innovation. So we think that we are fortunate to be in an industry where all the capabilities of Infosys are perfectly aligned with the direction that our clients are looking for, whether it is the renewal of their existing landscapes or getting into completely new areas where software is making its way for the very first time with the power of intelligent systems and new digital experiences. So we are optimistic about the future. Obviously, we are not any more or less immune to the outside forces than anybody else, and there is a lot of stuff going on in the world around us. But generally, based on our visibility, based on what we see in our client atmosphere, we see enough confidence that we are improving our guidance for the remainder of this financial year.
Hi, Chandra from ET Now.
Hi,
I have a
Chandra.
question each for Vishal, Praveen, and Ranga. Vishal, beginning with you, I think this is the third quarter when Infosys has come above what the street was estimating. So help us understand, is it because your mining existing business is better, or has Aikido already started translating into growth? Because, I mean, you articulated the strategy, barely, I think, a few months back. So help us understand what's led to this sudden turnaround that we are seeing. And does this mean you will achieve the bellwether status even before the next fiscal? Are you on course for that? Praveen, give us a sense of the total TCV this quarter, because there was an analyst report which said that you guys are targeting, over 1 billion to 2 billion every quarter. And Ranga, despite Chennai floods, despite cross currency, margins have still been better. So, help us understand what's really worked for you. I know volume growth would have been a factor, but apart from that, what has worked for you? Thank you.
So, it is difficult to say, Chandra. I have been here with my family the last 3 weeks, going around our different DCs and visiting our employees everywhere. There is a tremendous sense of optimism, a tremendous sense of positivity in the company. There is a sense of confidence. David Kelly talked about this idea of creative confidence, and I see that. Yesterday, Praveen and I did a what we call our zero distance session, where 25, 30,000 people show up, and there is an incredible atmosphere, and that, I think, more than anything else, leads to all the positive atmosphere and the positive results. I think if we break it down, it is still too early for the big initiatives to have kicked in. It is largely a result of the increased confidence. We have equipped our teams with much better tools, with much better solutions, much better capabilities. If you look at our deal wins, our win rates have increased dramatically. Our attrition has come down dramatically. We are at 13.4% now on a standalone basis, which is so I think that the bad attrition of Infosys is a long and distant memory. So we are overall, there is a lot of things that are starting to kick in. I would say the big contributors are this positive atmosphere, this equipping our teams to win better deals and delivery excellence, which is now starting to show up in the work that our teams are doing in zero distance. I've been a believer in innovation. I've been in the innovation areas basically my entire adult life, and it is relatively easy for a company of our scale to set up an innovation center and establish a center of excellence with some corner of the world. But to get 90% of the delivery organization to think of themselves as innovators, this is not easy, and I think that is something that our teams have managed to do. That has been quite amazing. Aikido is kicking in, and as you can see, every quarter we make sustained progress. We have more than 40 deployments now of our information platform, solving complex big data problems in a breakthrough new way. We have 200 clients now that have embraced this, and 40 are already in production. So this is quite an amazing achievement already. We have done more than 150 design thinking engagements. 70,000 of Infosians have been trained on design thinking. And so that has started to kick in, and some of the knowledge-based, AI-based renewal efforts in our key initiatives started to kick in. We have many clients who have shared their success with us. ABN AMRO Bank, Deutsche Bank, Mitsubishi, Boeing, all these companies have started to see results of the work that we've been doing, and so we are proud of that.
In terms of large deals, we have won 4 large deals totaling about $360 million TCV. In addition to that, we have one potentially large deal which is more than close to $600 million, but it's not exactly committed. So being consistent with our criteria, we are not calling it out, adding it to the large deal. We had 3 deals which we were about to close, but because of the holiday season, it got pushed out. And 2 of the 3 deals in the last 12 days, we have actually converted it. So from that sense, I think we are pretty confident about the large deal pipeline. We have a total pipeline of about close to $3 billion. So all in all, I think it's the pipeline is very healthy and it's consistent with what we have been focusing on.
Well, I think, hi, good morning, everybody, and happy 2016. Many of you have reminded me, this is your first quarter, this is your first quarter. So it is almost like, first quarter feels like first love in the sense that highly exciting. Yeah, highly exciting at the same time, a lot of unexpected pieces as well. I think this quarter we have navigated very well, and Q3 is traditionally, as Vishal was mentioning, traditionally there are seasonalities, there are furloughs and lower working days and things like that. But I think we navigated better than our expectations. And if you look at the year-on-year growth, in constant currency, we grew 12.5% and reported 8.5%. And if you look at the first 9 months, likewise, 12.5%. Coming to margin question that you asked, our margins, if you look at the first 9 months, are at 24.8%. And this quarter, the margin dipped by 60 basis points from 25.5 to 24.9. If you look at the math, it's very simple. The realizations, which came down by 2.5%, contributed to about 1.1% drop, and which was compensated by, to some extent, rupee, as well as the lower variable pay, which kind of compensated that 1.1%. In addition, we had the utilization as well as the Nova consolidation and higher subcon costs for additional 60 basis points. So net, it was 60 basis point drop. But the point to remember is our medium-term outlook on margin continues at 25 plus or minus 1. For the first 9 months, we have done 24.8. And we have levers. For example, our utilization lever is still there. If you recollect, about 4 quarters ago, our utilization used to be in the late 70s. Now, consistently over the last 4 quarters, it is in early 80s. We still believe that we have scope for improvement of utilization. Likewise, on-site effort mix is at 29.5. We do believe that we have levers there to reduce that. Likewise, in on-site role ratios and so on. So I think overall, if you look at this quarter, we have navigated well and on multiple dimensions. There is scope for operational efficiency improvement, and we will continue to focus on that, as Praveen said. On the guidance, earlier it was 10 to 12%. Now we have increased it to 12.8 to 13.2. If you look at the first 9 months itself, it is 12.5. So that's the broad perspective on the quarter.
Congratulations, gentlemen, for a good quarter. Vishal, I want to understand from you, going ahead, as far as FY17 is concerned, how sustainable is this growth? And, keeping in mind areas which were fairly softer, including oil and gas, aerospace, insurance, are you confident that this traction will continue? And more importantly, for FY17, how sustainable is the IT budget pipeline, the deal uptick that you're seeing right now? Praveen, to you, I don't mean to sound glass half empty, but there's a North America decline in terms of revenues. What is the outlook for the United States geography right now? And of course, there has been the omnibus spending bill, which will be increasing H1B and L1 visas. So what's your perspective? What is the kind of impact on margins? And Ranga, first quarter or not, you're a good luck charm. So any possibility for increasing that 24 to 26 margin band for FY17?
So maybe I can start. I think the overall climate looks good. We mentioned 12.8 to 13.2 for this financial year, which means that we are comfortable with what Q4, this current quarter, looks like. And that will set us up for a nice ability to execute in the year ahead of us. We will give our guidance for the year in April or whenever we do our earnings next, as we look ahead to the year in front. But as we have stated previously, we are confident to get to industry-leading growth next financial year, which starts in April. So we are on track for that, I believe. I believe that this momentum is for sure sustainable. I believe certainly the impact of the grassroots innovation, the impact of many of the initiatives that we have put in place, and certainly the innovation, the systemic innovation work that we are doing, will all start to become more visible as we get into the year in front of us. I think it is still early stages of that, and these cycles are long. So we definitely believe that this momentum is sustainable, and we are optimistic and excited about the future, and we are maintaining our view that we'll get to industry-leading growth in the new financial year. In terms of the climate and the IT operating environment, we have to adjust our offerings, our areas in which we engage based on the unique nature of every client and the uniquenesses that are there in individual industries. So oil and gas, yesterday oil went below $30 per barrel and so forth. So we think that there is we have to adjust so we acquired the small company Noah Consulting, which does more upstream exploratory work with data analytics and so forth. These kinds of offerings help us adjust our offering, our solutions to the times that are at hand. And I think that despite the individual pressures in certain industries, we feel comfortable with what the future holds for us.
Yeah. So on the visa front, in the short term, we will continue to expect similar kind of measures across geographies. Initial estimate of potential impact for us because of the increased visa cost was about 0.3% impact on the margin. But in the last couple of days, we have got clarification that the increased cost applies only for new visas and not for amendments and transfers. So the impact will be much lower. But in some sense, it is a cost of doing business. But in the longer term, we have to look at how to diversify our resource base, how to increase recruitment on site, how to have a much more global workforce, how to create development centers on site, and so on. So those are some of the things we are working on over the next 2-3 years to mitigate this risk.
Well, on the margin, we have always said that Vishal has multiple times reiterated we want consistent profitable growth. I think that's clearly the key focus of our strategy execution. On the margins, we have said that 25% plus or minus 1 is our medium-term goal. The first 9 months, we have done 24.8%. As I said earlier, we have levers, and we want to optimize those levers. For example, the utilization in the last year typically used to be late 70s. Consistently now it is above 80s, and we still believe from current 80.6 it can move up. Likewise, in the on-site effort mix, 29.5, it can certainly, we're working towards moving down. And the subcontractor and employee costs, many other levers that we have that we would like to do through operational efficiency improvements further. And more importantly, I think, the currency is always there. We need to actively manage the currency, and this quarter has been extremely volatile in currency. And we have been, through our proactive currency management and hedging, we have been able to minimize the impact. So I think with these levers that we have given this outlook for 25 plus or minus 1%. And coming back to the other point that you asked, apart from the deal wins that Praveen talked about and which Vishal also briefly mentioned, our top account growth over the last 3 quarters, if you look at the first 9 months of the year, top 5 have grown 13% as compared to 12.5% in constant currency term for the company, which is higher than the company growth. As recent as Q4 of last year, we used to have flat to negative growth of those top accounts. This quarter, of course, they have been flat, but however, if you look at the 9 months basis, they have grown at 13% year on year. So they are some of the levers. That's the reason we clearly look at strategy execution, both in terms of large deal wins, top account mining on these operational efficiency improvements.
Hello, gentlemen. Rukmini Rao from Bloomberg TV India. Wish you all a very happy new year. Vishal, want to understand from you, since you handle the top 15 clients of Infosys, if you're looking at the top 10 clients, we've seen a marginal degrowth, and also in terms of the repeat business, we have also seen some bit of softness. Want to understand from you, what exactly is happening there? Is it just a quarterly phenomenon? And Praveen, want to understand from you, manufacturing and retail as industries, we're still seeing softness as for the numbers that you have given, but energy and utilities seems to have bounced back. So is the energy crisis over essentially? And Ranga, want to get from you a sense of what the pricing has been like, and also for the next quarter, what do you expect? Thank you.
So Rukmini, the top accounts actually, in the areas where we declined, it was a seasonal decline. So some of those are very large manufacturing and high-tech companies where there were furloughs and less number of days and so forth because of the holidays and things like that. So there is no particular systemic thing there that we are observing. Some of those clients are in Australia, where the currency impact has hit us despite the actual growth in terms of locally reported currency and so on. So overall, our engagement with the top clients, the top 10, top 25 clients has never been stronger, and we feel like our relationship at a strategic level with our clients, certainly our top clients, is the strongest that it has ever been. So I feel very confident about that. And look, broadly, I mean, the world around us in every industry is going through this dramatic transformation with digital technology. And last quarter, we announced our partnership, a strategic partnership with GE. And GE has obviously always talks about their own renewal as a software and a technology company. And this is happening in every industry, in every walk of life. And we at Infosys have the ability, we have the capabilities and the skills and the access to help clients achieve that objective. So in all the uncertainty in the atmosphere around us, in the broader economy around us, I feel very, very good that we sit in a situation where by and large, our ability to achieve our results is in our own hands. It is up to us to execute, and as Ranga and Praveen talked about, we are on our path to doing that.
From a services perspective, we have seen the growth has primarily been in ECS, where we have seen about 4.6% growth on a constant currency basis, and in financial services, it's about 3.2%. While ECS in general has grown, it's primarily come from the utility segment, where we are seeing a lot more investment in replatforming, legacy modernization. They're focusing a lot of investments on the renewables, a lot of investments on customer experience, CRM, and so on. So we have been able to capture some share of that increased spend. With respect to manufacturing, traditionally Q3 is a weak quarter. Energy is still soft. The oil price, as we saw yesterday, for a period of time, it dropped below $30. We are seeing a fresh wave of cost cutting in the energy space. So we expect energy challenges in the energy to continue, or the softness. Telecom is another area, again, another industry which continues to be soft. We are seeing telecom providers focusing a lot more on enterprise, renewing their focus on enterprise business. They are focusing on some of the newer avenues of growth, like over-the-top services, mobile payments, connected devices, and some of the newer avenues. Manufacturing, it's traditionally soft quarter because there's a lot of furloughs in the manufacturing industry. In addition, we had the one-time impact of JCI in Q2. So if we ignore the JCI impact, manufacturing would have been pretty much flat this quarter. So the momentum is, the pipeline is decent in manufacturing, and even if you break down into subsequent sub-verticals, we are seeing good traction in auto. To some extent, aerospace is challenged. We are seeing some softness there. And we are also seeing some softness in the industrials, particularly with exposure to oil, energy, and mining. But retail, again, will continue. We expect some volatility in the retail. It has been a soft quarter. It was marginally down, I think, this quarter. The holiday season was good, but it was driven primarily by more growth on the mobile side and the digital side than on the in-store side. The strong dollar is actually putting a lot of pressure on global retailers in particular. They continue to focus on mobile experience. They are continuing to focus on omni-channel. CPG companies are focusing on simplification of their landscape and so on. The bright star in the horizon is financial services, which is a big thing for us, and we see continued momentum there. The pipeline is pretty strong. We have seen growth both in new accounts as well as new wins in existing accounts. A lot of focus on digital, a lot of focus on regulatory. There's tremendous focus on analytics in terms of understanding client propensity to buying products, understanding client behavior, trying to personalize offering for individual clients, and so on. So net-net, barring the softness we expect in energy and telecom to continue for some period, the pipeline is decent across the rest of the verticals, with financial services leading from the front.
So as we said earlier, I think we've navigated the quarter well on seasonalities and other expected pieces. In addition, there were also unexpected events like Chennai, and we were able to the impact of Chennai has been insignificant, and thanks to the extraordinary work done by our delivery leadership team led by Ravi, and the infrastructure leadership team led by Ramdas Kamath, and all the employees in Infosys Chennai. And coming back to the margin question that you asked, we are clearly in that, we have consistently said that we'll be in the band of 25 plus or minus 1%. And first 9 months, we are at 24.8%. And as I said earlier, we have levers to look at the margins improvement. But those levers, some of them like utilization, which is at 80.6% now, we have scope for improvement there, like subcontractor cost management, on-site role ratios, likewise the employee on-site effort mix, which is at 29.5. There are multiple levers that we have. We will continue to work on them. On the pricing, if you look at sequentially, we had a realization decline of 2.5%. And if you look at also last quarter, we had a one-time that 23 million. If you look do apple-to-apple comparison, the pricing decline is 1.5%. But the more in the quarter to quarter these changes are there, the more relevant number is year on year. Year on year, if you look at the pricing decline has been 4.5% in reported basis and 1.2% on constant currency basis. So the whole endeavor is look, as Mr. Murthy used to say, market determines the price and the company has to manage the cost and make itself more competitive through innovation, productivity that Vishal talked about, that we will certainly work towards. That's the broad picture. In the near term, these pricing pressures would be there and we have to navigate. So the productivity measures that we have deployed in each of the services lines and the automation piece, we hope that to some extent we need to offset the price in the coming quarters. Let's see how we do on that.
Vishal, any closing comments?
So we are pleased with the results of the quarter, with what our team has managed to achieve, despite the traditional seasonalities and then additional headwinds that we saw. And that performance, which is a combination of the grassroots innovation combined with the structural innovation that we have put in place, both picking up momentum as the quarter went along, has set us up for a good road ahead, and so we are looking forward to that. Thank you.